So, Tim, it's been a challenging, a very challenging year for Europe. What does the M&A situation look like in Europe right now, and what do you foresee for the rest of the year?
Right now, the M&A situation is depressed. There's a big proportion of European M&A inward investment into Europe, which is coming from the States or Asia. But the overall levels of activity are down, and I think they're going to stay down in relative terms. I personally believe there's going to be an uptick next year in 2012 because of the European euro crisis. I think that's going to force sales of a variety of assets, and I think that there are people sitting on the sidelines raising money or hoarding money that's going to get put to work when that happens. And I think quite a lot of that activity will be from Asia and Latin America rather than inward investment from the States, although I think there will be some from the States.
You mentioned buyers in Europe from both the U.S. and Asia. Are those buyers motivated by the same set of forces, or are different forces motivating the U.S. buyers as opposed to the Asian buyers?
That's an incredibly perceptive question, I must say. I think they are motivated by very different things. The Asian buyers are motivated by, first, actually, a perception that they're not wanted in the U.S. The CFIUS legislation has been applied against a number of Chinese buyers in particular in ways that have been taken as signaling a broader political message than perhaps it really justifies, but that's how it's been received in China. So the belief seems to be developing in China that Latin America and Europe are good places politically. Secondly, Chinese M&A is motivated by longer term considerations. They can comfortably tolerate 1 or even 2 years short-term dilution if they think that there's a strategic long-term benefit to a transaction, which a US public company will find very difficult, certainly, to admit to. And thirdly, they are looking at things for strategic reasons rather than pure value reasons anyway. So although value is important, it's not as important to them as finding a way to spend the $3 trillion of reserves that the country has amassed.
You mentioned CFIUS. Is there any sort of groundswell in the UK or in Europe for a more protectionist regime, or has that not coalesced?
Not at all. It's a fundamentally un-English idea, protectionism. The UK economy and the whole UK way of thinking about economics and trading is fundamentally free trade to the point where it's somewhat irrational, in fact. I mean, the backlash against the city and Wall Street in the UK has been far less extreme than it is in the States. I'm not talking about popular level demonstrations, we've had a few of those, but in terms of how the country feels about bankers, we just don't have the same level of resistance to finance. The UK more or less invented finance. In 1845, the bank assets in the London banks were double the bank assets in the banks of the entire United States of America, France and Germany added up. And it's just a mercantile international trading mentality. France does have a protectionist streak in its culture and its economic life, but it does that in order to preserve national champions, not because of the kind of things we're talking about. CFIUS is pretty much a unique US type of protectionism, and it's fundamentally political protectionism, not economic protectionism.